What companies deserve your hard-earned dollar? Which would you want to work for? How can you know if they share your values? Just ask us. Just Capital is a nonprofit that tracks who really means business in supporting workers, customers, communities, the environment, and shareholders. We measure progress, track success, and help them be better. When you see the Just Capital seal, you know what's real, because just business is better business. Visit justcapital.com to learn who makes your dollar count.
And good afternoon. We are doing it live right here, weekday afternoons now at our new time of the 4 o'clock hour in Los Angeles. Yep, we're doing more in 2024 now at 4 in the afternoon. Mottek On Money 5 nights a week for you. Now we're at 4 o'clock in the afternoon. Right after me, it's the Legal Eagle, Royal Oaks, with the 790 KBC News Blitz, following Mottek On Money here at 4, and the News Blitz at 5 o'clock with Royal Oaks. We're also streaming live online worldwide at 4 at kbc.com and on the on-demand Mottek On Money podcast for you at kbc.com, Apple, iTunes, and all your favorite podcast platforms. And yes, on the socials too. Well, inflation back in the spotlight today, sending stocks lower right out of the gate this morning. Stocks did recover from earlier losses, though, to end the session mostly flat. The latest reading on inflation for the month of December did come in slightly hotter than economists had expected, raising new questions about the Fed's next move. We did see the S&P 500 down nearly 1% during the trading session. Ended lower by 3 points today at 4,780. The Dow gained 15 points, settling at 37,711. And the NASDAQ managed a closing gain of a half point at 14,970. The yield on the 10-year note is back below 4% now at 3.97%. Stocks have been struggling this week leading up to today's consumer inflation reading for the month of December, showing consumer prices higher by 0.3% over the past month and up 3.4% over the year. And the so-called core inflation rate, which takes out food and energy categories, was up 3.9% over the past year, still nearly double the Fed's target of 2%. Crypto's in the spotlight with the U.S. spot Bitcoin ETFs started to trade today after the U.S. Securities and Exchange Commission gave regulatory approval yesterday. We did see a Bitcoin holding above 46,000, while the other tokens did move mostly higher. We did see Bitcoin right now. Let's bring it up about 200 here at 46,416. Ethereum at around 2,615, and Doge at the moment at 8 cents. The price of oil moving higher as we monitor rising tensions and shipping threats in the Middle East, a day after they slumped amid a large spike in crude oil and fuel inventories. Looks like the U.S. Navy locking horns directly with Houthi rebels, Iranian-backed rebels in the region. We see the price of oil moving higher by 65 cents today at $72.02 a barrel. Hertz Global, the rental car company, says it's selling about 20,000 electric vehicles from its fleet, or about one-third of its total, in the latest sign that the EV revolution is stalling amid weak demand from you, the consumer out there. The rental giant says it expects to take a $245 million charge in the fourth quarter, sending Hertz stock down about 6% early on, down about 4% at the close, and also weighing on other rental car companies. Avis down about nearly 4% during the trading day. Now, Hertz says the move unloading their EVs aimed at better balancing supply and expected demand for EVs, allowing the rental company to scrap a disproportionate number of lower margin rentals and reduce damage expenses associated with EVs. Damage expenses are high. Collision and damage costs for EVs remain high in the fourth quarter, according to Hertz in a regulatory finding. CVS Health, the drugstore giant, said it's going to be closing select pharmacies and Target stores starting next month as it tries to shrink its store counts and become more of a health services provider amid thinner profits for drugstores, according to MarketWatch. Well, what's the real deal in commercial real estate in Los Angeles heading into 2024? Well, I'll put that question more to Jerry Sullivan, National Managing Editor of the authoritative commercial real estate news website, The Real Deal. Jerry Sullivan will be joining me live later this hour. And this guy's really hitting it out of the park. Matt McGurkin, founder of DAP Sports. Matt has built one of the largest cross-platform sports and media companies focused on sports memorabilia, trading cards, and signed memorabilia, as well as other collectibles. Matt will be joining me live later this hour. But first, on your money, the markets, the economy, the inflation reading, cryptos too, and the whole works now. Joining us live is Gabriel Wisdom, Managing Director of American Money Management and author of Wisdom on value investing. Gabriel, thank you very much for taking the call here. Happy New Year once again. Inflation back in focus, coming in hot. Give us your view of things here at the moment.
Well, Frank, these new inflation numbers really do sort of pump the brakes on interest rate expectations. I'd say very low probability that interest rates will come down anytime. But by March, one of the Fed governors is saying maybe March, but too early for a rate cut. The fact remains that these interest rate cycles are generally very, very long cycles with long tails. The last big one began in the early 1950s following World War II, and interest rates on balance rose for some 30 years. And then for another 30 years, they basically declined. And so we're only in the early first inning or so of the next interest rate cycle. That's the way I view it. The other Fed officials that have been opining since this new consumer price index number came in, and remember, they did remove an essential component, food and energy categories, to the core inflation rate, and yet fell to 3.9% from 4% the month prior. But that's so far above the Fed target of 2%. I just think Wall Street's starting to get the idea that we're going to have higher for longer with interest rates, especially with the chorus of Fed presidents and participants saying, let's hold off.
You're live with Gabriel Wisdom with American Money Management. Thank you for that analysis, Gabriel. And so in the meantime, interest rates, at 20-year highs here at the moment, and even mortgage rates are ticking back up here this week for the second week in a row. And is this going to continue to strangle the consumer who's dealing with record high credit card rates at the moment and continue to put the damper on the overall economy?
Well, I think, Frank, that the internet and the ease at which competitors can come to the marketplace because of online shopping and online delivery is going to squeeze margins for the traditional credit card companies as well. You mentioned CVS closing some of their physical locations, and it's because of profit margin problems. And along comes another drug discounter. Mark Cuban, the owner of the Dallas Mavericks basketball team, has launched the Cost Plus drug company that under his name. He offers drug pricing transparency, lower prices with just a 15% markup to cover the costs. He buys the drugs directly from the manufacturers. Some of them are offshore or overseas. And that's going to put pricing pressure on one of the major components of, for especially for older people in the inflation picture, and that would be drug prices.
Right. Remember, Rite Aid filed for bankruptcy, last year. So that was one of the big bankruptcies of 2023, and looks like that case is still moving through the bankruptcy court system. We're watching that, and also Walgreens this month cutting its dividend in an effort to conserve cash. So coming out of the pandemic, the drugstores all of a sudden under a lot of pressure, and of course retail theft a big issue there as well.
There's no question. These are industries that are suffering right now. And when you think about what creates economic dismay and opportunities for investors, it's got to be the business and economic cycle for every industry. They last about 3 to 4 years. Different industry sectors will expand or they'll contract depending on where we are in the cycle. And many high-quality companies, and you just mentioned a few, they'll temporarily go on sale because they have a problem, but it's a recoverable kind of calamity. And we've seen that just in the last year with the regional banks.
All right, the other big story, of course, these Bitcoin ETFs have started trading. We heard from Kathy Wood from ARC today and saying that, how did she put it? Looks like Bitcoin, she said, is a public good. Saying that to CNBC. Her fund got approval from the Securities and Exchange Commission. She described Bitcoin as a public good as her company launches one of the spot Bitcoin ETFs after that SEC decision 24 hours ago here. What about this buzz about these Bitcoin ETFs and your thoughts about Bitcoin and the other cryptos at this point?
Well, Wall Street's very excited about this, Frank. Kathy's fund is the ARK Invest ETF. BlackRock's got one. Fidelity came out with a Wise Origin Bitcoin fund. Franklin Templeton has joined the fray with a Bitcoin ETF, and Invesco as well. Vanguard says this is not for them. But the 10 major institutions that have represented the Bitcoin ETF rollout, 10 of them represent some $10 trillion in assets under management. This is unprecedented to see over 10 nearly identical funds all begin at once, and the demand for trading was very high. But I thought one analyst brought up an interesting caveat. Much of the demand today is from seed money that was prearranged by the fund issuers. So this next week, following the Martin Luther King holiday, will be a key tell on just how popular and successful the Bitcoin exchange-traded funds will be.
All right, interesting. That was great observations there. And so Bitcoin still has its huge fans as well as harshest critics, including at some of the biggest names on Wall Street, still very, very skeptical about cryptos and Bitcoin right on down. So what are your thoughts now? I mean, this thing's been around for years. Gabriel, I know you don't have the laser eyes on, but when somebody comes up to you and says, I'm interested in crypto, what's the answer these days?
Well, I think about the gold rush story that got me interested in the picks and axes of any industry. For Bitcoin, it is, of course, the chip manufacturers, for the miners. It's the blockchain providers for Bitcoin. The Bitcoin miners, the two biggest are Marathon Digital, symbols MARA, and Riot Platform, symbol Riot, RIOT. They lost 12 and 15% respectively today, and I'm not sure exactly why the miners sold off so dramatically, other than that they were some of the biggest gainers in the stock market last year. The two of them were up well over 300%. Marathon was up almost 600%. But some investors, I think, may be positioning for this Bitcoin halving, where you get half as much. That's expected in April, and for miners, that wipes out the weaker players. Typically, this is a pretty disruptive thing in Bitcoin, but there is a charter in the Bitcoin code that requires this, and of course, it just brings the fan base back to that Bitcoin has integrity as a currency. Maybe it's true, but most governments don't agree.
On the air live with Gabriel Wisdom with American Money Management. Turning to the Middle East and oil prices here, we did see oil getting a boost today on the latest reports. The U.S. Navy shooting down 22 Houthi missiles and drones launched from Yemen, according to the U.S. Central Command. And one of the largest Houthi attacks to take place in the Red Sea in recent months. Also, there was a report that the U.S. Navy sank several Houthi rebel vessels of some sort, killing the crews. And we're, of course, watching the Israel-Hamas war continue. What about oil here as we head into the new year?
Well, Frank, we haven't seen much fallout yet, if any, in the oil markets. But I wouldn't sell my oil positions here just because.
Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
You loved Lala Kent on Vanderpump Rules. Now get to know her on Give Them Lala.
I'm obsessed with the fact that GQ has named Kim Kardashian Man of the Year. You're upset about it? I suggest you do better then.
If there were a Cosmo Woman of the Year and it was a man, how would you feel?
Well, that would just be lies. Name a man who's doing better than women right now, and you can give him Woman of the Year. But until I see that...
Watch what Lala is talking about on YouTube or search for Give Them Lala wherever you listen.
It's been a rough few months for oil and gas providers. They've been very actively involved in mergers and acquisitions. They're getting involved in natural gas and alternative forms of energy. What's interesting to me is that these armed conflicts in the Red Sea are creating big shifts in the transport routes between Europe and Asia via the Cape of Good Hope, and it's having a big impact on production. Tesla, for example, is suspending most of its car production at its factory near Berlin starting January 29 through February 11. Other manufacturers are saying they may do the same because of the considerably longer transportation times, which creates a big gap in supply chains, as I mentioned. And this may ultimately drive up prices. Less product with the same demand means higher prices.
Certainly, that makes a lot of sense. And at this point, Gabriel Woodson, let me ask you the big question here. With the kind of a rough start here on Wall Street, certainly to the new year, where are you putting money now and/or taking it off the table?
Well, you know, Frank, I'm a big proponent of investing for the long term because, as I've mentioned before, the world population continues to increase by over 200,000 new residents every single day, net, and they all want all the same goods and services. You know, people are people, and I'm seeing a major demographic shift in the workforce with automation, AI, robotics. The semiconductor industry it really has my attention for the long term. I buy some of the semiconductor exchange-traded funds here. Also, if you like popular and you're still intrigued by the Magnificent Seven or the Mega Eight, two players have really done nothing over the last couple of years. Netflix is down a little bit from its 2022 highs. Also, Amazon is flat, hasn't gone anywhere over a 2-year period. Had a great 2023, but these are great companies, but they haven't. The price performance hasn't kept up with revenue and earnings growth.
All right, we did mention the story about Hertz unloading a lot of EVs. Consumer demand not there, according to Hertz, and certainly we've talked to our car experts here, and doesn't seem to be a huge clamoring for EVs among consumers. Certainly not in the rental market anyway. What about the EV names at this point?
You know, they're soft, and for good reason. Because there's just a lack of appetite right now. What Hertz cited, Frank, was that they were losing money because of the high cost of repairing damage to the frames of these cars. Many of them are composite, or it's difficult to get service for, especially if there's been an accident or a fender bender. And so they're selling about a third of their electrical vehicle fleet. Not good for Tesla and the other providers. They had said they were going to order some 100,000 Tesla vehicles by the end of 2022 and 65,000 cars from Polestar, the Volvo unit over a period of time, and that's not happening. On the bright side, the electric vehicle battery turmoil may lower prices ultimately for these batteries. Lithium, which is an essential component for electrical vehicle batteries, is down some 80% from its late 2022 record, which is remarkable. I think this may provide some opportunity.
Very interesting. And we also heard from Ford recently saying consumers interested in EVs were unwilling to pay the vehicle's premium prices, and Ford has paused billions of dollars in long-term investment in EVs due to that reason. And And GM also recently saying it was scrapping its target to build 400,000 EVs by the middle of this year because of weak demand, something, of course, we've been following very closely here and been reporting about for quite some time. Gabriel Wisdom, Managing Director at American Money Management, author of Wisdom on Value Investing. Gabriel, it's always great to speak with you. Thank you very much for taking the call here this afternoon.
Thank you, Frank.
Mottek On Money continues here in 790 KBC. A mixed finish for the stock market today in a seesaw session as the market reacted to a hotter than expected reading on consumer prices today that came out first thing this morning. Stocks plunged early on but recovered most of the losses. The Dow managed a closing gain of 15 points, settling at 37,711. The S&P 500 down 3 at 4,780, and the NASDAQ gained a half point at 14,970. The yield in the 10-year note now at 3.97%. Looks like the damage has been done to mortgage rates, up for the second week in a row. We did see Bitcoin move higher today at more than $200 right now at $46,416. Ethereum up 11 at $2,615. And Doge at the moment at 8 cents. Apple shares down 60 cents at $185 and change. We're also watching what's happening here in Hollywood. A front page article in the Wall Street Journal today said Sherry Redstone, whose family controls Paramount Global, has entertained several offers over the years to buy the famed movie studio. Skydance Media CEO David Ellison now eyeing something more ambitious, according to the Journal. Ellison discussing an all-cash bid for Paramount's parent company, National Amusements, with financial help from other Skydance investors, including his father, billionaire Larry Ellison, according to people familiar with the situation talking to the Wall Street Journal. We see Paramount Global Class B shares down 77 cents today at $13.35 a share. Gold hovering above 2,000 here at $2,038 and change, up about $19. Oil up $1.21 at $73.23 a barrel. Mottek On Money continues here in 790 KBC. Nervous time in commercial real estate as 2024 begins. What is the real deal in commercial real estate in the Los Angeles area heading into the new year? Well, let's put that question and more now to Jerry Sullivan, National Managing Editor of the authoritative commercial real estate news website, The Real Deal, former editor of the LA Business Journal and the Orange County Business Journal. Jerry Sullivan, as far as I'm concerned, is the real deal. Jerry, thanks very much for taking the call here this afternoon.
Oh, it's a pleasure to be with you, Frank. How are you doing?
Wonderful. Happy New Year, Jerry. And on this important issue here that could rattle the economy once again, as it did last year with those bank failures we saw early in 2023. And now I see the headline story here that you guys have here. Distress looms as LA and Orange County see $21 billion in commercial-backed loans coming due in 2024. Tell us about that big story and the view here on commercial real estate.
Right, and this is the wave of debt that will come due, and most commercial properties, offices, retail centers, multifamily or apartment complexes, they take short-term loans of 2 to 3 years, and they have to refinance them every 2 or 3 years, and so it comes in waves, and there's about $21 billion worth of those sorts of loans backed by those sorts of properties that will come due over the course of 2024. The question is, as you refinance now in a higher interest rate environment, it essentially raises costs, and then do the buildings still pencil out? Some of them are already in trouble or struggling or not meeting their obligations with their cash flow, and it could get worse. And so that's what we're looking at, and it's going to play out across various sectors, and that's an interesting aspect too.
Certainly. What about that slow return to the office? What's happening in downtown Los Angeles, for example?
And there's no great change in that. It has been slow, and I think everybody can see downtown is still not where it was pre-pandemic in that regard. And so of these, just to break it down a little, of this $21 billion and the properties that account for those, I think about 20% are office. So you can just do the quick math. That's about $4 billion.
Interesting.
To office properties.
All right.
But, it also hits retail, about 30% of retail, and then multifamily is also a significant portion.
Interesting. Yeah, so we are seeing some cashing out here, right? A lot of mom-and-pop apartment owners couldn't sustain those policies that were put in place and didn't receive rents for quite some time, and even some of the bigger players seem to be cashing out of apartment business here.
And there's a lot of pain in the apartment sector, and again, about a third of that 21, so $7 billion worth of that looming refi, and it doesn't mean that all of those are in trouble, but some of them already are. A good deal of them are already on watch lists, and so that will play out in the apartment multifamily sector also. Yeah.
Very interesting. And is there any serious move to converting these offices to apartments or condos? Is that something that's happening to any significant degree at this point?
I don't think it's to a significant degree, and it's not as easy as folks might imagine, and not every building is suited for it. I do think we'll begin to see that, and I think L.A. And Southern California in general is still searching for a bottom on office prices. And at some point, if the price goes low enough, there's a lot more possible about conversion or simply tear down and and build from the ground up with a new use such as residential. So as sensible as it seems in an area with a housing shortage and too much office space to just convert office to residential.
What companies deserve your hard-earned dollar? Which would you want to work for? How can you know if they share your values? Just ask us. Just Capital is a nonprofit that tracks who really means business in supporting workers, customers, communities, the environment, and shareholders. We measure progress, track success, and help them be better. When you see the Just Capital seal, you know what's real, because just business is better business. Visit justcapital.com to learn who makes your dollar count.
It could be information to change your life forever. Or the Something You Should Know podcast could just be something interesting.
Well, one person who understands dogs better than most is Jen Golbeck, and she is author of a book called The Purest Bond, Understanding the Human Canine Connection.
People who went on weight loss plans with their dog lost more weight, and it's just a really interesting connection about how our own weight and our dog's weight is tied together.
Something You Should Know, wherever you listen.
Seems awfully sensible. Not quite as easily said as done.
The other big deal in the commercial real estate world, certainly the other big deal in commercial real estate on the West Side was the West Side Pavilion deal announced recently with UCLA going in there in a big way for research. Google originally was going to go in there, but UCLA, according to that big announcement just in the last week or so, will be going in there. The West Side Pavilion, the former the mall there being converted. Are we going to see more of that sort of thing?
Well, there aren't too many users or buyers like the University of California system that could swoop in on a deal like that. Google Google's so big that they can write off, an investment like this. They put some money into this, and we're planning more. And I think Hudson Pacific, a local developer, was operating and redeveloping it with the idea that Google would be there, and I think probably to their relief and to Google's happiness, the University of California was ready to buy and has plans for that. Very exciting to have I think UCLA expand in that way in that area, but also it tells you something about the overall office scene and landscape, and I don't think Google could justify that sort of addition to office space right now.
And it looks like the commercial real estate folks here in Southern California are cheering what just happened in Sacramento. Looks like a assembly bill has been pulled from committee consideration that would have imposed new requirements for the construction of logistic facilities and warehouses throughout California. Anyone who flies in to LAX sees those big box warehouses down below. We are the largest manufacturing region in the United States, and what they were considering in Sacramento would have added additional requirements, which would certainly put another crimp into the commercial real estate business. So at least that's off the table now.
Yeah, I think that there's great relief in the industry over that, both for the specific effects and just for I think to see the notion of government regulation being tamped down and a little pushback on that. And it was interesting that was introduced by a legislator from the Inland Empire, which is where a great many of these very big distribution hub logistics centers that draw a lot of trucks and, do have an effect on the area. And the way this bill was written, I think you had to be 1,000 feet away from any residences. And from the industry's point of view, you might as well just outlaw new warehouses.
Isn't that something? Yeah.
It made it very difficult. Yeah.
And here in the heart of the city, one of our neighbors here in Culver City, Amazon planning to lay off hundreds of employees at its L.A. studios. And according to The Real Deal here, I see Amazon.com cutting more jobs at its streaming service and studio divisions in Los Angeles, putting its real estate footprint up in the air at this point, with Amazon and its production company cutting hundreds more employees at Prime Video and Amazon MGM Studios. And so we're watching that story, too. Of course, more fallout on the big changes Hollywood has seen over the past year.
Yeah, a lot of the change, the positive effect of a lot of the Hollywood stuff was for studio space, and studio space was in high demand and everything else. This seems to be, I think we're starting to see that roll back a little and ease, and I don't think you could just throw up studio space and expect it to be, booked. But for a while, that was the case, and so I think this is a sort of a harbinger of a moderating of that trend.
Jerry, thank you very much for that comprehensive update on all things commercial real estate in this area this afternoon. That is Jerry Sullivan, National Managing Editor of the authoritative commercial real estate news website, The Real Deal. Look forward to many conversations in 2024 here. Jerry, thank you very much for taking the call here this afternoon.
It's my pleasure, Frank. Thank you, and Happy New Year.
Happy New Year to you and everybody there at The Real Deal. And folks, it's time to start the new year off right with reminders from attorney Clark Fielding of Fielding Law. Now, if you've been hurt in an accident that was not your fault, it's easy to feel lost in the sea of legal complexities. Fear not. Clark and his team of sharks are here to navigate the legal waters for you. They have the expertise to tackle any case, big or small. Fielding Law is not just about providing legal advice. They're also about making sure you understand every step of the process, so consider them your partners in justice. Whether you're facing a sea of paperwork, swimming in contractual confusion, or caught in a legal undertow, Clark the Shark is the lifeguard you need. The Fielding Law team is dedicated to protecting your rights and ensuring a smooth journey through the legal currents. So as you dive into the new year, remember Fielding Law always has your back. They're not just lawyers, they're your fantastic friends in the legal world. Call them now, 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Good afternoon. It's Mottek On Money at our new time in the 4 o'clock hour, followed by Royal Oaks and the 790 KABC News Blitz at 5. Great to have you with us here. Well, he is hitting it out of the park. Matt McGuckin, founder of DAPS Sports, talking about DAP Sports, which remains the top live shopping company in the U.S. on TikTok these days. Matt has built one of the largest cross-platform sports and media companies focused on sports memorabilia, trading cards and signed memorabilia, as well as other collectibles. Matt McGuckin joining us live here now. Happy New Year, Matt. Thanks very much for taking the call this afternoon.
Frank, it's a pleasure to be on. Thanks so much for having me.
Congratulations on your tremendous success. I've been very eager to speak with you and share with the audience your great story about how you've completely revolutionized the sports memorabilia business and eye-popping sales using TikTok primarily, right? Tell us about your great enterprise there.
Well, it started in my bedroom. I was just trying to make a couple bucks on the side, $50 a night, $100 a night, turned into $1,000 a night. One night I do $70,000 in my bedroom, and I thought maybe I should take this a little bit more seriously. And now, a couple of years later, we've got a TikTok shop popping and doing almost $20 million in annual revenue.
You moved from the bedroom to the living room, maybe?
Yep, from the bedroom to the living room. That's right.
No, that is fantastic. So you become a big enterprise now, and this has gone global, of course. So you had the idea of using TikTok basically to promote sales, and your website has these live sales and basically live auctions, right?
Yes, and what people don't realize is that in the last 12 months, TikTok has launched something called TikTok Shop, and that allows people to purchase directly in the live stream, whereas in the last 5 to 10 years, since live streams have existed, you're in a live stream, and then people will push traffic to a website or outside of the actual stream. TikTok has brought everything into one place, so it makes it super easy for the user to watch and buy at the same time.
That is terrific. So obviously everyone in the e-commerce world has watched what you're doing here, and what lessons can you share with some of the other folks who want to duplicate this kind of success?
Well, I think that there's a tremendous amount of opportunity on TikTok and on the live stream platform, whether it be Instagram, Facebook will develop their own live streams. Even Amazon will get into this game. Over the next 3 to 5 years, you're going to hear the term live shopping over and over and over again. And a lot of these live shops do not exist yet. So if you're selling a product out there, even if it's from your home or you're only doing a couple sales a week, if you start to look and research into TikTok or any other live shopping platform, there's going to be a tremendous amount of opportunity to be the first to market on live shopping.
That is very, very exciting. Well, congratulations on that. And of course, in addition to TikTok, you have your website, DAPZ, right? DAPPZ Sports, and that also has a live component.
Yes, DAPsports.com. That's correct. DAPPZsports.com. And we live stream on the website as well. We have relationships with Fanatics. They have their own live streaming platform. There's a company called Whatnot. You can find us on there, DAP Sports on Whatnot. And like I said earlier, there's going to be more and more apps that you see. Even eBay has its own live app at the moment. So you can catch our page, DAP Sports, on eBay as well. We're on all of these different platforms. And if you like ripping sports cards or Pokemon, we are definitely the spot where you're supposed to rip those at. All
right. So let me ask you this while we're talking to you. We're on the air live with Matt McGuckin, the founder of DAP Sports. And how are LA teams' memorabilia doing these days?
Oh, well, obviously Kobe Bryant, LA legend, and now the newly acquired Shohei Ohtani on the Dodgers is going to be huge for the sports card industry. Ohtani already had so much hype around him, even being an Angel, but now that he's come to the big brother, so to speak, of the Dodgers, they're 2 or 3 years removed from winning a championship, and now their expectations are through the roof with Ohtani in the lineup. Ohtani cards are already at a premium, going for in the hundreds of thousands of dollars, and if he gets a championship, you might see the first sale of an Ohtani card breaking $1 million.
That is amazing. So for anyone that wants to get into this sort of thing, I haven't touched a baseball card since elementary school when kids used to get out there and say, I'll flip you 5, and then that's what we did out in the playground. How are things evolved now, especially for the kids, and how can you get started?
Well, it's funny you bring up yesteryear, so to speak. The highest selling card ever is a Mickey Mantle, and that card, that rookie Topps card, 1952, sold for over $12 million. So a lot of people think, oh, they're all junk, but when you have the right cards, they're definitely worth a pretty penny. And there's three ways to kind of approach cards. One is investing in cards, right? And that means you're buying a Mickey Mantle right now, or we can use a common player. We'll use Ohtani for this conversation. You buy an Ohtani and you think over the next 20 years, his price is only going to go up. He's going to win 2 more MVPs. I think that he's going to win 3 championships with the Dodgers, some people might say. And if all of those things hold true over time, his price will slowly go up and up and up. And he'll resemble a Michael Jordan, right, of baseball. And that's how his price would go up. So that's the investing component. The second component would be collecting. That's where you're opening pack of cards and you want to keep your cards. You don't want to sell them. You're not necessarily in it to make money. You love the artwork. You love the designs. You love sports. You just love the fandom of collecting. And then the third one is for that adrenaline rush, right? You're opening packs and you spend $50 with the opportunity to potentially make $100 or $1,000 or $10,000, because a lot of these cards do sell for record numbers every other day. You have this kid, C.J. Stroud, in the NFL, who's out.
Matt, thank you very much for that great information here. We wish you and everyone there continued success in the new year. That is Matt McGuckin, founder of DAPZ Sports, live with us here on Mottek On Money on 790 KABC. We'll be back again tomorrow afternoon at 4 o'clock at our new time. And be sure to catch the 790 KABC News Blitz now that starts at 5 here with our Legal Eagle Royal Oaks. You're listening to 790 KABC.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get inside of Jennifer Love Hewitt.
It's dangerous, I think, to say to women, you can't look like you're not 22 to me anymore because I don't know how to take that. Okay, well, that's your problem because I'm 44. This is what I look like. By the way, she was a looker. Like, congratulations to that 23 or 25.
But I'm a different person now.
You know?
Inside of You with Michael Rosenbaum. Wherever you listen.